if you look at overall demand scenario, I think generally compared to when we started last year, it is one different mix in terms of demand from digital transformation deal from more efficiency based deals. Plus, it's quite different from a vertical mix versus where we started the year. So I think as we go into the next year, I would say typically you would see first half being relatively tougher than the second half. And as we look at certain segments, we feel we have opportunities on the manufacturing vertical that are looking favorable. We have certain decent pipeline in the healthcare segment. That is, we were working on healthcare internally to restructure it. I think now we are well equipped on that. There are certain headwinds that we see on the retail segment where the general impact on macro is stronger, and hence, given it's a smaller size of our portfolio, we think we are well cushioned around it.
You're deeply focused on the North American market and the BFSI segment within that. Your peers aren't reporting so much of the details or difficulties on the retail or PG sector. What is causing the difficulties, if you may elaborate, for Tech Mahindra?
From a retail standpoint, I think some of it is seasonality. Our BPS business typically in Q4 goes down versus Q3. Q3 is a seasonal demand which is higher. So that was the trend. But as we look in the future, if you follow the global macroeconomic trends, most of the retailers are finding difficulties in terms of financial stability. And I think that trend is kind of reflecting partially on their focus on cost, right? So I think that is broadly the impact. But if you look at opportunity side, there is much more travel and logistics that is improved. There is area of aerospace that is getting better because more and more demand is to cater to increased travel. So I think we're seeing momentum and traction there, including manufacturing. I think there's a lot of pivot there to adopt digital technology, especially EV focus on automotive side. So there again, we see a positive momentum continued. So that's kind of the driving changes in terms of these verticals.
The big focus in FY23 was driving revenues from acquired businesses. How has the year gone on that priority, and what will be the priority for FY24?
So from an acquired business perspective, what we'd envisioned for them from a business case standpoint, broadly they're in alignment with that. I think they've performed in our expectations. As we continue to the next year, our focus is going to be to drive more synergy, benefit out of those acquisitions. Our target is to drive almost 15 to 20% of synergy revenue as a percentage of the standalone number. So I think we have made right interventions from a integration standpoint, getting them aligned to our core business, making sure there's a leadership ownership, and we have the right process and governing standards to drive that synergy outcomes.
Right. How do you look at the new fiscal year on the generative AI front? And do you see it changing the way the company operates? Do you see lesser need for people? And what are the changes that you'll be making in your processes to keep up with it?
I think right now it's going to be more upskilling the people to adapt and learn the new skill that's required in the new world of technology. So we are focusing a lot on upskilling. We'll be focusing a lot on supporting our people from a company standpoint to get them more equipped to the new world. Because what we stand for is rise to the future, and from corporate and TechM perspective, what Mahindra stands for and TechM stands for, we'll continue to make sure that our most important resources and assets, our people, get the benefit of changes technology from a learning availability standpoint. That's where we're focusing, and we're supercharging our learning function to make sure that the newer technology gets rightly embedded in the organization. So that's a focus for now.
If you like the video, do like, comment, share and subscribe.